Order filled.
Move that down. So try to get, so when you get a wedge, this 3 push pattern, what you can expect is 2 legs and 10 bars sideways to up. So there should be about, I mean, if this wedge pattern is going to play out, then there should be about 10 bars that will get about sideways to up. And that should be able to get us out here. If it doesn't do that, I'm comfortable buying more lower, and then we can try to get out, just break even on it all, or see what's needed. We have an inside outside bar here. The bear is probably going to come down below that tail below. So what the bulls are trying to get is a wedge but double bottom. It's the wedge pattern, and then get a double bottom here, and then be able to scare out the bears and get them move up. If the bar closed like this, I mean that'd be a good buy above that bull bar. So that's 2 minutes left, so it could become a lot of things. But I have a lot of confidence that if with me buying here, that it's either going to go up now or I can buy more lower and then at least get out break even. So most of the time, I'm either going to make a 5 point profit or at least break even. That's going to happen most of the time, and then a small amount of the time I would lose and should be able to keep the loss without keep from the loss getting too large. All right, so bull's got a pretty good bull bar there. I'm gonna go ahead and just buy another, put one more above that. I'm almost wondering if I should.
Order submitted.
Yeah, after a wedge, double bottom, bears failed to go lower there. Good looking signal bar, should be a good buy. We're lower in the range now. If we can get above that bar, I think the bears would be pretty nervous. I think they'd go ahead and be getting out above that bar. Look what's trying to form on the 2000 tick. We're at the trend line, and bears have this signal bar here. So the bulls probably will be able to trap those bears that sold there. Probably, probably a lot of beginners. This is probably an area where a lot of beginners would be selling. They see that it's gone all the way down like this, and they say, "Oh, but there again, I'm gonna hop in and sell," and then they get trapped out right there. And then so my next order is gonna be right above where that is to get long. And even if it doesn't go straight up right from there, like I said, I'm still confident I'll be able to manage the trade as it goes lower. Like we're coming into this area where price has been very agreed upon. So yesterday, prices just stayed right in this area, and the day before that, right, it's just a lot of time's been spent in this area. So this is kind of an agreed upon area. This is like where the price should be. So when it was trying to break out up here, it was failing to, and now it's moving back into this area where we know that that price has been the correct price before. So yeah, we'll see. We'll see if they can get a few more ticks up. Definitely something to look for. A lot of the strongest moves come from traps. trap trader. So if you can be on the side where the trap traders are getting out, then that's going to be the right side.
Order filled.
Okay, so we're in there. Do I think having a live account is worth it? Um, uh, yeah, I mean, that's, ultimately that's the end goal. Um, it's having your own account that you trade with your own money. It's yours. Um, the prop firms. If you're doing like with like a prop firm, for example, then like you're not at the risk of them going out of business. Then um, so like having your own account, like that's like the way to go. Um, I think if you're doing like a simulator, um, I mean that's fine. But like if you can't trade the simulator, then you're not going to be able to trade live. So that would be, that would be like a minimum. But yeah, I mean trading live, trading with real money, then like you feel that emotion, like it matters to you, and at some point you have to overcome that emotion. So Bull's got a double bottom and a second entry here. That bear bar is not the follow through bar that they wanted. Look at the 2000 tick. So at a first entry sell and then a second entry sell, and now the second entry has failed. Now we're getting a good signal bar above that. We had an entry that was similar to this here. Similar in a way. Similar in that it was at the end of a wedge. A bear moved down. There was a wedge. There was a double bottom. Do I think we'll get this? No, but you can expect at least a move back to the moving average. Probably expect at least a pause in the selling. I think this entry bar hurt the bull case, where we had this double bottom, second entry buy, but then the entry bar was this poor bear bar. I think that hurt the case there. Just kind of noting a concern I have when you have a trend line and it breaks above that trend line, more than 50% of the time it's going to come down back below the low. Let me draw in. So trend line break, and more than 50% of the time it's going to come back below that low, and then it would head up. I think the bulls really need another bull body in this bar. If there's a bear body at all, then it's going to increase the chances that this is going to be the trading range, and then we're high up in the trading range here. Yeah, I mean that'll happen a lot uh, with beginners. Just how they set up their trade. It's prone to having their stop hit, and then it goes in their direction. So I mean, let's say like they have the direction right, but then that's how they're managing it with their stop placement. So this is what the bulls need. Like I said, they need a bull close. They don't want a bull close will mean there's probably more higher prices, but if they had a bear close, then that would mean we're probably at the top of the trading range. Notice I'm not using the trade copier on this kind of trade. Like when I'm like buying with limit order with the plan of scaling in lower, I'm gonna trade very small size. Like I just did one micro. But when I get that excellent setup, then I'll go ahead and do full size on it. So this is good for the bulls. Bull body, the bar closed above the prior high. We are testing this breakout point now, so we might have a bit of might have some sellers here. Might have a bit of a stall there. Testing that breakout point, testing the moving average. I think they'll still be more higher up though. I'll go ahead and move my stop up. At least be able to get a couple ticks out of it if it came back. I wouldn't want you know this to just turn back on me. So um, I'll be right back. I'm just gonna get some water. when you get a breakout, so well, when you get a strong move, so something like this, um, the target is the highest close or the highest open in a bear move. So the highest open is like the start of the bear move is this highest open right here. Um, so and like in this would be its own move here. So the highest open is right here. That's normally if you're starting to come back to pull back into that the highest open is normally the place where they want to take it. So that would be like a target area there. Go ahead and move my stop further up, just in case it doesn't get me out there. Yeah, so this trade turned out to be pretty good, right? We had this wedge bottom here and created this double bottom. First entry long, second entry long, bought. We were buying low in what the overall range was and able to ride it back above the moving average here. Looking at the 2000 tick chart, like we were talking about, the uh, sellers were trapped here. So probably a lot of beginners, they see, oh, I can sell below these bear bars here. Oh, I'm gonna do it again here, but they're not seeing everything that's going on, and then they sell there, but then they get stopped out. They may sell again, keep trying to sell there, get stopped out, and um, that pushes that move up. Yeah, thank you. I think uh, I think everything made a lot of sense with it. Um, so initially, what drew my eye to buying was this wedge. So we had a push down, pull back, second push down, pull back, and then the third push down. And when you have a wedge like that, and then a good looking bull bar, then normally you get a two-legged pullback, and it'll be about 10 bars. So I knew by buying there, most of the time it's going to have that 2 bars, 10 bars, and then two legs back. And so we're getting something like that now. And then some percent of the time it's not going to do that, but I knew that we're lower in the trading range. We've had lots of trading range price action the last few days. I knew that I'd be able to
Target filled.
scale lower if needed, scaling lower if
Order filled.
uh, yeah, so my scalp is 2.5 points. Try to get it up here, and if it goes lower, shouldn't have an issue scaling in with it. Something else we're having here is a triangle. So we have this doji bar and then two inside bars. So we're getting a triangle. And we're breaking out below that triangle, so we can expect it to pull back at least to the apex here. Um, so you can see that triangle on the 2000 tick. It's something like this. So like breakout, we would expect it to be bought and come back up into the middle. So it's going lower. Now the question is, where do we put the next buy order in? Probably just to do another scalp distance down, so 2.5 points on the 39.
Order submitted.
Nothing on the 2000 tick is telling me that it's a bearish. They were very bearish. I mean, if bears are selling off here, then this is a very weak sell-off. Coming back into the apex of the triangle now. Bulls ended up with a signal bar there.
Order canceled.
So I'll go ahead and
Target filled.
it's a target filled there. Small scalp. But when you're doing those limit order scalps, you want to trade very small.